Hey, welcome in, folks. Today we are going to talk a little bit about, well, I say we, Bill is not with me today, so I am flying solo. We are going to dive right in and talk about the secret that built a natural gas empire. So if I'm looking over here, it's because I'm looking at the screen. So listen, I appreciate you. I appreciate you coming. And this is also something that is a metaphor for how you can build your own empire and how you can create success within yourself. It has to do with thinking a little bit differently and not one dimensionally, but multi dimensions. So let's go ahead and dive into it and see what this secret is, who the empire builder was, and what the story was. So the secret that nobody saw coming, the pipeline that changed everything. One deal, one overlooked opportunity, one company that thought differently and built a natural gas empire. That company is Energy Transfer. And sometimes the best opportunities are hiding in plain sight, but only if you're thinking differently than everybody else. So that is the key, is not to think in the box or the frame of today. How does it transcend to the future? And when you're talking about trading, when you're talking about hedging, when you're talking about business planning, if you are in the energy business or any other business, you can't look at where you are today. You have to look at where the direction of the market is going to allow, whether you're on the supply side, the market side, the midstream side. These are all unique visions inside of how you build an empire. And when I talk about an empire, it doesn't have to be billions of dollars. It can be a $10,000, $100,000, $1 million. It could be $10 million. Whatever size portfolio that you have, you can build that into an empire. But you have to think differently. You have to focus on overlooked opportunity. You have to focus on thinking differently. And if you don't think differently, if you don't apply unique thought to your strategies, you're not going to propel forward. You're going to be average, and that's okay. Yeah, there's a lot of average people, and there's nothing wrong with that. But when you propel forward, it's because you're thinking uniquely, creatively, and you see something different that everybody else sees. So the humble beginning of a small play to an energy titan. Energy Transfer wasn't always the behemoth that it was. In the early 2000s, they weren't even on the radar. They had some small gathering, but they did one thing. They connected West Texas, or Waha, to the Houston Ship Channel. Why is that important? Houston Ship Channel is demand center, so they have a lot of demand in that area. Waha is in the heart of the Permian. At the time, Waha and Houston Ship Channel traded in tandem with one another. Waha was a little bit discount, but not significantly. And what happened was, with the growth in the Permian that Energy Transfer saw coming, Waha went severely discounted to Houston Ship Channel, which meant the pipeline that connected the two was able to sell all the capacity at market rates, which were phenomenal, and it created an income stream that allowed them to make bolt-on acquisitions and even stair step into interstate transportation. I think Energy Transfer's first interstate pipeline was Transwestern, which was connected Waha with California. So that is the humble beginnings. They essentially saw this small play and Waha and the Permian as being a potential discount to Houston Ship Channel, and that made the company. That made the company what it is today. So why it mattered? West Texas to the Gulf. Waha was the heart of the Permian. Houston Ship Channel is the key Gulf Coast demand and export point. But back then, no one was paying attention to the spread. The spread was nominal. It was still there, but nominal. The pipeline was there, but the value hadn't shown up yet. And that's the key thing, is to look at where that value is going. Now, the market setup. flat spread, then a tectonic shift. At the time of the purchase, Waha and Houston Ship Channel were trading nearly flat. Waha was a little bit discounted to Houston Ship Channel, but not much, not dollars. And that's what it ended up being. No huge arbitrage opportunity yet. Everyone thought, why bother? This wasn't a slam dunk. It was a contrarian bet on how the market might evolve. So you're projecting into the future. If you are trading, if you are hedging, you have a view into the forward market. And how you interpret that view is going to give you the opportunity to make calculated decisions like this. So the Permian boom and the takeaway crisis, then it happened, production soared, Permian production exploded, pipeline capacities didn't grow fast enough, bottlenecks happened, Waha collapsed versus Houston Ship Channel, suddenly the spread blew out. From empty to gold mine, an empty pipe turned into a money-making machine. It was the pipe that nobody really wanted. Now it was fully contracted. Energy Transfer made huge margins shipping cheap gas from Waha to Houston, high-priced Houston Ship Channel. Arbitrage paid for the pipeline many times over. So this became the stair step, and it was the birth of a strategy. Thinking differently paid off. They didn't follow the herd. They anticipated where the market was going, not where it was. And that pipeline became the foundation for a multi-billion-dollar company. Now, what can we learn from this strategy? How could you apply this to you and your trading, your hedging, your business, whether you're a producer or a consumer or midstreamer or a trader? Markets move in cycles. Constraints create opportunities. Infrastructure can be undervalued until conditions change. Thinking ahead gives you the edge. And every empire starts with one bold move that others think is crazy. So let's fast forward to Energy Transfer today, from one deal to a national footprint. Energy Transfer has 120,000 miles of pipeline, oil, gas, NGLs, terminals, export facilities, one of the most dominant midstream players in North America. Now, how can you think like Energy Transfer? Don't wait for the spreads to show up. Look for imbalance before it's obvious. Think in terms of optionality. Where can infrastructure create leverage? Where can spreads create leverage? It's not just about infrastructure. If you're not buying a pipeline, where can you create a hedge or a spread between this commodity and this commodity? Look at market friction as potential energy unlocked. Now, are you ready to think differently? I'm going to introduce you to myself. I'm Brian Pieri. I'm with the founder of Energy Rogue. And whether you're a trader, operator, investor, the edge comes from seeing what others miss. This isn't just history, it's a mindset. If you want to follow the market, you'll always be late. Let me say that again. If you want to follow the market, you're always going to be late. If you want to lead it, you're going to have to view into what is next. So this is what Rogue Radar is built for. This is an affordable entry into the energy markets, helping you find the next Waha to Houston Ship Channel spread, the same way that Energy Transfer did. So if you click the link down below, that is going to go to Energy Rogue, and you can scroll through, see some of our see some comments from our wonderful customers. You guys are awesome. I appreciate you. But you actually can sign up today for 14 days free. And you have three choices when it comes to oil and gas markets. Okay. You can ignore the market. You can spend 30 plus hours a week studying the market, and that includes fundamentals, supply, demand, imports, exports, storage, so on and so forth. Or you can put it all into option 3, which is Rogue Radar, only $89 a month, and you can get it for 14 days for free. So all you have to do is click that button, and it is going to take you to this page. And as you can see right here, 14-day free trial. So let me take you inside and let you see what you get. So when you get Rogue Radar, you get a video at the beginning of the week with Monday game plan. So the video and Monday game plan come out at the same time. So you get a PDF report, which is a game plan on how to play the week, some narrative around what is happening in the marketplace, plus graphs that will show you storage, stocks, net imports, net exports, as well as some things that are happening in the marketplace. Then later in the week, when news and releases from EIA, the Petroleum Status Report, the Natural Gas Storage Report, Rogue Radar comes out, and we drop the next video. And what we do in that video and what we do during the week is we actually cover all of these factors so that you have a simple red light, green light system, because natural gas is not one variable. It's not that price. It is an amalgamation of storage, weather, production, Canadian imports, demand, LNG, Mexico exports, LNG exports, Mexico exports, international markets such as JKM, TTF, and the European storage. So all of these come into play, and we have where we've been, where we are, and where we're going. That's what's unique here, is we show you where we potentially are going and what the key development statistics, main takeaways, bullish factors, bearish factors, so on and so forth. And we do the same thing for crude oil. So every week you are getting 2 PDF reports plus 2 videos every single week. But here's the secret sauce. This is the secret sauce. If you click on this right here, you get a report that runs every single night, and it is our natural gas radar. And that runs, and that gives you the fundamentals, that gives you the technicals, that gives you everything that you want to know in the business. Technical analysis, fundamentals, weather, economic analysis, CFTC, LNG market analysis, news and sentiment, Fibonacci levels, machine learning price prediction. This runs every single night. Every single night, our machine learning is actually identifying where the market may go, as well as an AI analysis and today's update in the marketplace. So that is the key here, is that we do this for natural gas, we do it for crude oil, and we're about to release more energy commodities in here, such as heating oil and diesel and RBOB. So those are going to be coming, but on crude oil, we actually cover everything in the technicals, the fundamentals, the news analysis, OPEC. It reads the latest OPEC report and actually recaps the sentiment and what has changed since last month, which the demand growth hadn't really changed, and the non-OPEC liquid supply growth. This was revised down. So supply growth is revised down. So could that be bullish? And then you read through the CFTC, and then look at this. Every night, this AI analyzes and assesses news out in the marketplace, and it assessed 30 articles, 30 high quality articles. These aren't just any old articles. These are what the traders read. So and it comes up with a sentiment. Right now there is a bullish sentiment, and when we look at the marketplace, it responded that way. So this is what is run every single night, and all of this is only $89 a month. If you want to get started today, all you have to do is click the button down below, and it's $89. It's 14 days for free, so you can try it out. And if you don't like it, cancel, and it's no big deal. So listen, I appreciate you coming by. I hope this helps you think a little bit creatively, think a little bit differently, and give you an idea of how you could think creatively and differently within the natural gas market and the crude oil market. So listen, my name is Brian. Would love to see you inside. I hope you're doing great. Have a fantastic day, and I hope this helped you in your day. And if so, drop a like, drop a comment, share it with a friend. And listen, I appreciate you watching, and I hope you have a great day.